Good morning from London. I'm Menace Craney with Danny Berger in New York. You're welcome to Bloomberg Brief. Let's set that agenda.
Countdown to CPI. Forecasters expect the smallest back-to-back increase since last summer, adding to the case for a September rate cut. Pressure mounts on Biden. More notable names come out for the president to step aside, including Vermont Senator Peter Welch and Hollywood actor George Clooney. And after Lucid delivery numbers calm fears over EV demand, we speak with CEO Peter Rawlinson on the company's future. Good morning, Manus. Happy CPI Day.
Happy CPI Day, Danny. You know, football's coming home for the UK. Can the CPI, yeah, absolutely. Can the CPI bring it home for the stocks? There was a furious amount of buying in the S&P 500 last night into the close, spiking up on Nvidia, spiking up on tech. Get ahead of the CPI, because if that CPI comes in any way in line, it could invoke the wrath for the bulls. Up for a seventh day in a row. We give it a little bit back this morning. 10-year bonds this morning trading at 4.28. Again, the 10s went very well yesterday. Powell saying good ways to go. Again, just holding back. 10-year paper in the auction flew off the shelves. If the CPI is really, really good, the JP Morgan survey of longs will be rewarded to Brent. I thought we'd just pop that in there, Danny. What we're seeing is the IEA's narrative come out. Global oil demand growth slow, so we've come back. That's still in the green, up by 0.2%, but that post-COVID rebound has run its course. And the question is not just in oil, but in the consumer, in the savings, and in the narrative out there. Are we at the end and the beginning of a much more significant disinflation narrative? Danny, good morning from London.
You're really tempting me by saying it's coming home, because, you know, the only thing I want to chat about this morning is football. But, you know, we have more important things to talk about, maybe, kind of. For the Fed Chair Powell, Manus, it was a snoozer for this market, right? It didn't move much. But I thought Nick Timiraos at the Wall Street Journal put it really well, that we're witnessing the pivot of Powell from concentrating on inflation to giving a much more sturdy base for cutting, and that is the labor market. He said the number one thing keeping it up at night is getting inflation back to 2%, but doing so in a way that makes sure the labor market doesn't crack.
Yeah, delivering the double soft landing, so to speak, and that dual mandate is all the more important. I know that we both read Paul Donovan's notes quite seriously. He's talking about today the owner equivalent rent, excluding the fantasy owner's equivalent rent, is going to give us a much better idea of where we are, where the middle class are, Danny, and that's critically important.
Yeah, he said that to us before when he's been on with us, the fantasy of OER. Yeah. I was actually looking, an economist over at the BLS basically said last month's OER was weird because of strange statistics from New York and kind of how they surveyed people. And that's a problem, right? If this data is not exactly reliable and strange things and ghosts are tampering with the data that we see before our eyes.
Yeah, and we've had a lot of debate about the data and about New York rents. Furious scrabbling around for apartments. Anyway, it seems to be a global issue. Let's talk about that testimony from Chair Powell. It was day two. It was in front of Congress, saying that he believes inflation is receding, but we're not there yet.
We want to be more confident that inflation is moving on a path sustainably down to 2%. Not at 2%, but on a path sustainably to 2%. That's the test we've articulated. I have some confidence, as I said earlier, that we are on a downward path. I think if you look at the data, it's pretty clear that, but we have not said, though, that we have sufficient confidence, and that will be a decision that our committee makes.
Our guest this morning is Olivia Micklem, Portfolio Manager at Artemis, and she writes this. We are seeing ongoing evidence of deflation creeping into the system for the consumer as well. McDonald's launching value menu items, or Walmart increasing their rollback count by 45% last year. Olivia joins us now around the desk. So you see this disinflation narrative. The question that Danny and I would have is the breadth and the depth, and the question we ask everybody, acceleration.
Good morning. So, yeah, I think what we're seeing is there have been pockets where the low-income consumer has looked a bit pressured. And in response, we're seeing the likes of Walmart and McDonald's start to offer some more value back to them. That's really leading to some of this disinflation narrative that we're starting to see in the system. More broadly, to your point on rents, if you look at private market data, we're seeing that data start to improve and come down as well. So the overall trend, I think, remains supportive for what we and Powell are looking for in terms of that inflation dating starting to correct.
In terms of how this market reacts, Olivia, and specifically this equity market, market, I could probably craft a narrative either way to say hot CPI, cool, the economy is great, I should be buying tech. Maybe cooler CPI, I could say, cool, the Fed's going to cut, I should be buying tech. It's confusing how this market will react to the data that comes in. So what for you do you need to see that it still keeps intact the bull case for this equity market?
So I think from our point of view, what we're really looking for is to be the stock pickers. So while the overall market will react how it reacts, what we're looking for is the individual companies, how they're performing, how their profit margins are looking. And as we are heading into Q2 earnings season, that's a really important factor for us to watch. But I agree, I think there seems to be both sides of the coin could continue to be supportive for markets at this point.
We'll dig a little bit more into this, but we have one breaking news headline from Apple. Of course, yesterday evening they were saying to us that they were going to sell 10% more phones, but they have settled an EU antitrust probe over tap and pay on tech. So we'll dig into that a little bit more. But breaking news from Apple. Look, when we talk about trying to diversify the portfolio, lots of people have been very cautious about, when do I go for, value stocks? We're looking at growth outperforming value by the most since 1995. Now, that is not a shocking fact. What is a little bit more important is that onward trajectory of growth relative to value is when does value shape up in the narrative? Either the profit drop that we've seen in value has got to change, or we've got to see something on the earnings flow in tech that shifts us to diversify. How do you look at that conundrum?
I think we try and look, as I said, on an individual stock-by-stock basis. And I think if you look beyond the mega-cap tech trends that we're seeing, there's an awful lot of opportunities in the market, both in large cap, but particularly in small cap, that are really attractively valued. Mm-hmm. So we would say that small cap is providing some really interesting opportunities, great discount to large cap at this point. And there are both growth and value companies in there that are good enough quality, trading at really attractive valuations. And we think those opportunities are being overlooked.
Olivia, I think you and maybe Julian Emanuel at Evercore are the only people who have talked to us and said that they like small caps. It's such an underloved sector right now. But just put that into what you were saying before. Is this, I can buy some of the small caps in there, or can I go out and buy the Russell 2000?
I think it's all about being selective. There's an awful lot of businesses in the Russell that are still unprofitable. They're perhaps very early stage growth, or those that have been struggling that are perhaps on their way towards, a more tricky situation in terms of bankruptcy. So you've got to be selective, where we think active management is really important. But we certainly think that that is the place to be looking for the best opportunities at this point.
We're debating on a daily basis. Danny and I are going to spend the next part of this show talking about whether Biden continues on the ticket. What does it mean for the White House? Your job is to step back from the day-to-day minutiae and the noise that people like Danny and I create, and to tell us what is the future for bigger, long-term equity returns on dividend yield and cash flow. Beyond tech, you say that is infrastructure, regardless of who sits in the White House next year?
Yes, we really think so. So obviously we've seen the infrastructure bills from Biden have been very, very popular. The US has had massive underinvestment in infrastructure for a long time. So these bills are very popular. Money has been dispersed, and it's benefiting both traditionally Republican and Democrat states. So we think that irrespective of who ends up in the White House at the end of the year, I think there is bipartisan support for perhaps an extension to the current bills and ongoing investment, which would benefit anything exposed to infrastructure in terms of the industrial complex from here on in.
The bond market, though, Olivia, has been worried about growing deficits and maybe more inflation under Donald Trump. Does that translate to this equity market? Do you think about that, or do you stick with your infrastructure plays?
So I think, yes, there are components of perhaps what we might see under Trump in terms of tariffs that would be inflationary. I think, generally speaking, it's fair to assume that we are existing in a higher for longer market than we were before the pandemic. So I think in whichever scenario we're looking at, it's fair to assume that inflation will stay a little bit higher than it's been in the past, and rates might stay a little bit higher, but should come down for where they are now.
Okay, Olivia, really wonderful to speak with you this morning. Thanks for joining us in the studio there in London. Olivia Micklem of Artemis. Just want to touch on those breaking lines that Manus mentioned about Apple. They are now avoiding an EU antitrust threat over their tap and pay probe deal. It essentially means that third-party apps can come on and have a payment system that you can tap and go. It's not just existing in the Apple universe. Margarita Vestager saying that Apple has committed to allow rivals to access tap and go tech, and it will prevent Apple from excluding other mobile wallets on the iPhone's ecosystem. Okay, Manus, let's get some of the other top stories that are trending on the terminal this morning. The IEA, you spotted this one, says global oil demand growth has slowed to its weakest in more than a year as China's post-pandemic recovery fades. Global demand remains on track to grow by less than 1 million barrels a day for 2024 and 2025, according to the agency.
Market tracker IDC says Apple's Vision Pro won't cross 500,000 sales in the year. The company's $3,500 mixed reality headset has yet to sell 100,000 units in the quarter since its launch in the US in February. And domestic sales are expected to drop 75% in the current quarter.
The time has come to talk about football, Manus. Again, the only thing I care about, England v. Netherlands in the Euros yesterday. Ollie Watkins comes in, only touches the ball 4 times, and scores a beautiful score in the right back pocket in the 90th minute, shutting out Netherlands, meaning that football maybe, I hope, is coming home. They face Spain in the finals on Sunday.
Well, I can tell you what, Anna Edwards has already organised burgers, beers and a barbecue.
Are you going?
I'll be in Ireland. But look, I think there's a real sense of festival here out in the city. I was in the Ned yesterday afternoon, huge screen. Look, this is a big moment for the UK. The last time they sort of brought it home, it was at Wembley. This is going to be in Spain, Danny. It's going to be a very, very different atmosphere. Looking at the betting odds, in Berlin against Spain. 8-11, Spain are the favourites to win.
Yeah, I was at home watching by myself, and I woke up the whole neighborhood by screaming, and maybe a tear or two.
The Americans won't understand what's happening there. And, of course, it is going to come down to... I mean, if you look... I was just chatting to some of the people in the newsroom here. There's the 16-year-old Lamine Yamal. I mean, he's already made history. Will there be anybody younger than him?
The youngest ever.
Scoring. Look, the youngest ever. A bit like myself on this show. Coming up in the show, Biden is under pressure. Speaking about age, well, the senators as well as Nancy Pelosi and even his friend George Clooney are now raising questions. Danny.
And Lucid shares, they are hitting cruise control right after beating second quarter estimates. We're going to be speaking with Peter Rawlinson, Lucid CEO and CTO, later in the hour here on Bloomberg Brief. It's your Bloomberg Brief. Danny Berger in New York. Manus Cranny is in London this week. Now, to politics, Joe Biden's candidacy is facing mounting pressure after Vermont's Peter Welch became the first Democratic senator to call for the president's withdrawal. Axios is also reporting that Senate Majority Leader Chuck Schumer is open to replacing the commander-in-chief. This is all, of course, happening as Biden heads to his final day at the Washington NATO summit. For more, let's bring in Bloomberg's Kevin Whitelaw, who's been tracking it all abroad for us. So, Kevin, we have the list growing. Nancy Pelosi also talking about Biden needing to make a decision. Some of the big Hollywood Democrat donors like George Clooney writing in the New York Times calling for him to step down. This is what he wrote. The Joe Biden I was with 3 weeks ago at the fundraiser was not the Joe Big Effing Deal Biden of 2010. He wasn't even the Joe Biden of 2020. He was the same man we all witnessed at the debate. So what now, Kevin?
I mean, look, this story just obviously is not going away. And 1 or 2 strong performances, a good speech here or a good public appearance there just is not going to change the narrative anytime soon for Joe Biden. And the problem he finds is he can have a good day, he could have a good week, he could maybe even have a good month. But all it takes is 1 or 2 other high-profile stumbles, and it's going to raise all of these questions again and even further cement the concerns that a growing number of Democrats and independents have about the ability of Joe Biden to finish out another 4-year term.
Kevin, good to see you. Yeah, I mean, look, even though in the break we were sort of saying, well, if it was Taylor Swift that came out and sort of said something, it would actually potentially move the political pendulum. I think the difference is what's being said publicly by the Democrats and what's being said privately. They're trying to wait for this NATO performance, this grand theater piece in Washington, which is a very global moment for him in terms of what NATO does with Ukraine. If you look at Chuck Schumer, according to Axios, he is open to replacing Biden. This is the private conversations, according to Axios. Of course, in public, he's saying something else. How important is that, and how important is it that you've got now a senator, Peter Welch, stepping out into the fray, stepping into the sunlight and making a call for him to go?
Well, at some point, you're sort of getting to a place where the bell can't really be unrung. Once you have a couple of really high-profile Democrats out there saying that he needs to step down, and then let's say he doesn't, then it makes it really hard for everyone to go back and say, oh, just kidding, I actually now think he's fine to serve out the term. And so I think that's why you're seeing most of the pressure still in behind closed doors, being quietly leaked out. You saw Pelosi's very careful phrasing, which is essentially saying he needs to make a decision. Most people would have thought by now he'd already made his decision. He's won the primaries. He's won millions of Democratic votes to get to where he's going, and he's supposed to get the nomination next month. There is a very, very small window, and it would be a truly sort of unprecedented, wild event should he decide not to go forward. And so I think that's really going to be ultimately up to him to make that decision. No one can make it for him, given where things stand right now. And in 2020, he thought he was the best and maybe only person who could beat Donald Trump. He appears to think the same thing now, even as a growing number of Democrats have very serious doubts.
Well, in the words of Hollywood, according to George Clooney, the dam has broken, and we can't put our heads in the sand and pray for a miracle in November, or we can speak the truth. This is going to be pretty momentous if there is a step back by Biden, and then we go into the hubris of who replaces him. Succession. Pretty interesting TV show, and it's playing out live in Washington. OK, good to see you, Kevin Whitelaw there, our Brussels bureau chief on the ongoing political saga. From politics to finance, Archegos founder Bill Hwang has, along with his former CFO, were found guilty of fraud in a Manhattan federal court. It took the panel just one day to reach that verdict. Charlie Wells joins us around the desk this morning. I mean, this was a pretty significant finding against Bill Hwang and the CFO. They could face the rest of their life in prison. I mean, what is it, 20 years apiece on each of these charges. So it's a pretty hefty prison sentence. When will we know the worst case scenario?
Look, so sentencing is scheduled for October 28th. But of course, this is white collar. And so we see the huge amount of prison time that both of these men could potentially face. But with white collar, you know, there will almost certainly be an appeal. Yesterday, Wang's lawyer did not make any immediate comments about this. But, you know, sentencing in white collar can be served concurrently. And so that can significantly reduce the amount of time that someone has to spend. If you look back to another high-profile white collar case, Sam Bankman-Fried, he faced that maximum potential sentencing of over 100 years. He got 25.
When you look at these sorts of things, these white-collar crimes, and quite high-profile ones, you mentioned Sam Bankman-Fried and now Bill Hwang. How does this sort of change Wall Street as a whole? Is there any element of stepping back and saying, OK, we need to look at this more closely. We need to, especially for a bank, look at our risk parameters more closely. I know we had that conversation when this happened, but does the sentencing now change things?
Look, so the U.S. Attorney for the Southern District of New York yesterday, Damian Williams, said that this verdict was a warning for those who want to cheat the system. But a warning is not a change of law. And since 2021, there has not been significant change on the disclosure rules, on the reporting rules that hedge funds have to make, that family offices that operate a little bit like hedge funds, like Archegos, have to make. And so, you know, this was $10 billion down the drain. That was many years ago now. This sentencing is likely to be significant. We'll have to see how that shapes up on the 28th of October. But again, no significant legal changes to how those disclosures have to be made.
Charlie, thank you so much. That is Bloomberg's Charlie Wells on Archegos. Coming up, Manus and I will have your front pages for you.
Let's get you up to speed with the front pages. News around the world, Danny. This is what we're checking in on. First up, the Washington Post keeps the focus on D.C. and the NATO leaders' move to Trump-proof the alliance in Washington. The move is about controlling Ukraine military aid away from U.S. command, signing a decade-long defense pledge and pushing the defense spending.
Next up on the Bloomberg, one of the most read stories is about watches that if you've bought basically any of the luxury watches, Rolex, Patek, all of them are falling even further behind equity. So if you bought them as an investment, you would have been better putting your money just in stocks. Prices slipped again last month. Manus, the only watch that outperformed all of these, or just the watch that performed the best, was Cartier, 2% gain so far this year.
there you go. Tradition holds value. CNN writes this. Costco, the membership fees, they're going up. Now, this is the first time since 2017. What's it going to cost you? $65 up from $60. That's an 8% hike. Takes effect from September the 1st in the US and Canada. And of course, Danny, Sam's Club, Walmart-owned Sam's Club, they raised their membership prices as well. But you've got a little fast fact of the day on what that price rise is the equivalent of.
I do.
Inform us.
I do, because raising the price by $5 is the equivalent of one rotisserie chicken at Costco. And see, this is the beautiful thing about Costco. One rotisserie chicken. And why investors love it when they hike their fees, because this is the only way Costco makes money. They're loss leaders on everything else, which is why going to Costco is like Disneyland. It's my favorite activity, Manus.
It's your favorite activity. We're going to hire a car. This is a road trip that we're going to do, and we're going to film it. You're going to take me on a road trip from Midtown New York to a Costco.
Correct.
But we have the producer of the show saying the reason why we're going is because the hot dogs are $1.50 as opposed to going to IKEA for the meatballs.
For some reason, you don't strike me as a man who likes hot dogs, Manus, but they have other good stuff. We'll get a rotisserie chicken and a slice of pizza. It'll be great.
Listen, I'm trying to go for the green card, so I'm sort of, I'm becoming more and more and more involved.
Yeah, they won't give you one unless you've been to a Costco. I'm sure on that, so we'll make the trip. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Manus Cranning is in London. Let's set your agenda.
Countdown to CPI. Forecasters expect the smallest back-to-back increase since last summer, adding to the case for a September rate cut. Pressure mounts on Biden. More notable names come out for the president to step aside, including Vermont Senator Peter Welch and the Hollywood actor George Clooney. After Lucid delivery numbers calm fears over the EV demand, we sit down with the CEO of that company to talk about the future. Danny, good morning from London. CPI day.
Yes, it is. And it is also another day where I get to stand here in front of this board and tell you about how it's another record in equities, the 37th of this year so far. Yesterday was one with some force. It has been kind of this creep higher to new records. Yesterday was a more than 1% gain. It was helped by the mega cap stocks, but we take a breather from that today. S&P futures down about 0.1%. Not a lot of movement in your 10-year yield either this morning. We are down by less than a basis point, 4.27%. Also sort of a snoozy reaction to Powell. Same goes for your currency market. Euro stronger by about 0.1%, 108.47. But not a lot of reaction to Powell because we've already priced in 2 rate cuts. But we have CPI today, Manus, and then earnings kick off in earnest on Friday with the bank results. So we could see some movement.
Look, I like the way you describe it, a snoozy-doozy kind of Powell testimony. The question is, Danny, are we like overexcited kids in the back of the car that have had too much sugar with the doors closed? And when this CPI comes, it's going to be a bit of a rip-roaring. It's a slow build-up with the sugar. And then when it comes, it's got to be in line or better, I think, to invoke the narrative for the bulls in this market.
Wow, that is the best metaphor I have literally ever heard, Manus. I'm stealing that one. That is so good.
On the fly.
It was so good. No, but I mean, you make a really good point because, again, we haven't moved much to Powell, but I guess the CPI needs to surprise in a way that's more than 2 cuts because, again, this market is already somewhat ahead of Powell at this point.
Yeah, and again, it goes back to, there's got to be something for everybody. And what was it, the line from Paul Donovan said, you got to exclude the fantasy owner's rent equivalent. We're both living that fantasy and paying that owner's equivalent rent. That's all I'm going to leave you with that thought. But it is an important component. And it is something that has chastened the market on an ongoing basis.
Yes, but it's this push and pull between the market caring about politics, as we did after the debate, and then it caring about the economy. Now, on the politics part, Padhraic Garvey, head of global debt and rate strategy at ING, writes this: if Biden pulls out, treasuries rally, yields fall. But if Trump wins, treasuries sell off, yields rise, even if eventually, but for unobvious contrarian reasons. And he joins us now. Padhraic, great to see you in person. So what are those unobvious contrarian reasons for that?
Yeah, I think it was really interesting after the debate. Clear Trump win, and the markets decided that what does a Trump administration mean? It means growth here and now. It's not so much about the future. it's equity market performance right now, it's tariffs. There's a real inflation aroma to that whole combination. And it's not so much about the deficit. I mean, I kind of disagree with this notion that this is, a worry about the deficit. We've got a big deficit right now. So that combination saw treasuries sell off. And I think if we get the realization of that type of outcome come November, we can have more of that.
Laura, good morning. Good to see you. Yeah, I mean, we were all scrabbling in the dirt for a solid reason on why the steepeners were there, from immigration to tariffs. I like how you're sort of very honest about your moments. You've had bouts of success, but you say if Biden resigns, it is a risk-off event. Risk has been really searching for a reason since November 2023 to fall over. If he steps down, why is that a material risk-off event reverberating?
I think it's, if you think about it, Manus, it shouldn't be, because if Biden resigns, or if Biden pulls out, what we have arguably is more certainty. So it takes that whole story away. But I think risk assets at the moment have had this fantastic run, and they are vulnerable to an excuse to sell off. And I think this is just one of those things that could be an excuse to sell off, because you could construe how that creates all kinds of issues. It has question marks about the current administration. It has question marks about, who steps in place of Biden, how that works, et cetera, et cetera. So, does it impact the economy meaningfully? Does it impact the future in terms of the macro story meaningfully? No, it doesn't. But it just gives risk assets a bit of an excuse to just pull back a bit.
And it's fair. If there's a new candidate, there's a lot of new information we have to absorb and try to understand. Yeah. But if the equity market rally, or risk rally rather, is so vulnerable, is it vulnerable to the data that comes in? Because equities have seemed pretty nonchalant about all of it. Hotter data, soft data, it's still big cap tech wins everything.
It's remarkable. There's such a positive combination of circumstances ahead. We're going to have rate cuts. We're not going to have a big recession. We're not going to have big corporate defaults. Credit spreads ultra tight, risk on, rates pretty benign. The whole story, volatility exceptionally low. All of this is a remarkably positive combination. We got the CPI number this morning, expected to be benign. So it's shaping up to be, I think, a set of circumstances that's probably too good to be true. Something's got to go wrong, I feel, between now and September. And I have to say, if we go into September with subdued inflation and, let's suppose, a mild rise in unemployment, I wonder, will Chair Powell still cut if we're risk on like we are today? If the housing market is as bubbly as it is today? It's a tough one. It's not straightforward.
Yeah, I mean, well, then you need to go to lunch with Torsten Slok. The two of you can decide that there's going to be, he can bring you over to the no-cut side of the table. That is a risk that I think the equity market, and to a certain extent the bond market, has not really absorbed. It still believes it's a far left-tail risk. Let's talk about term premium. Lots of people have said to us, oh, look at the term premium. It's turning, it's sloping upwards. Again, with as Danny has said often, the fog of next year, the fog of the back end of this year. Would there be enough term premium yet in the bond market that could potentially compensate me enough for some of the inflation, immigration and tariff policies that we think may come down the pike if Trump is elected?
Yeah, it's really interesting, because if you look at the 10-year yield today, there is technically no term premium. And what I mean by that is an exposure to the 10-year matches a rolling 1-month bills exposure over the next 10 years based on the market discount. So there's no compensation for the risk you have in the 10-year, which tells me that the market is not discounting the size of the fiscal deficit properly. But going forward, if the Fed goes to 4% and the 10-year goes to 4%, we've got a problem, because we've got no curve, which is why we believe if the Fed goes to 4%, which is 150 basis points of rate cuts, 10s, they got to go to 5. I got to have a curve. I've got to have a 100 basis point curve. So, unless we have a big recession or something systemically breaks, this balmy combination in my mind, means that we're looking at 5% as a target going forward once we get beyond this rate cut enthusiasm process.
And obviously in that, as you're kind of talking about, is sort of this deficit finally being priced in and having some term premium for that. Do you think that this is a market that, much like the UK, can have a political influence, that the bond vigilantes can come into any new administration and see their spending and send yields higher and actually have that sort of impact like we saw across the pond?
It's absolutely possible. It just has not happened yet. We've had a few tailed auctions, 10s and 30s have struggled over the past couple of months, but what I'm not seeing is a creeping requirement for a significant new issue premium that pushes up yields and causes yields to price in a positive term premium before the Fed cuts rates, because the easiest way to generate a term premium is to get rates down. But as it is, it's just not there. It's remarkable. I mean, it's great for the Treasury because they are managing to issue, I think, at very advantageous levels in the 10-year part of the curve.
Padhraic, obviously that slope on the 10-year premium has been incrementally improving. I take your point that it's not in the green just yet. Talk to us about other things that could push the global flow of money. I'm reading stories on the Bloomberg this morning. The rich are getting ready to leave France. They've been trying to do that for years. The rich are getting ready to leave the UK. Well, they have been doing that for years. But this is about the global flow of money when you take the Bank of Japan into the mix, when you take the global outflow of money from Europe, and I'm not being facetious about it, a flow of money out of Europe, out of France, out of the UK, etc. That money washes up somewhere, and to a certain extent, that flow is dollar.
Yeah, and if you look at the liquidity circumstances here in the US, they are really ample. I mean, on my numbers, we still have a $1 trillion excess liquidity circumstance here in the US, and I'm firmly of the opinion that it's been a really important bolster for the US economy over the past number of months. We have over 400 trillion of idle liquidity going back to the Fed on the reverse repo facility every month. Bank reserves are at 3.2 trillion. They have been falling, but we still have an excess of liquidity. So liquidity has not been an issue for dollars. And yeah, I mean, it's been a really positive story over the past number of months, and it looks like it's going to remain that positive story. I have to say as well, okay, I was kind of surprised that the Fed tapered their quantitative tightening so soon. But I guess that's a whole other story.
And we'll save that for another day when we get a little bit of news on that. The Bloomberg House we're going for a really good core CPI, to use Jay Powell's words themselves. Padhraic, thank you so much for being with us this morning. That is Padhraic Garvey of ING. Coming up on the show, we're going live to West Sussex for the Bank of America Breakthrough Technology Dialogue. Peter Rawlinson, the Lucid CEO and CTO, sits down with Bloomberg for an exclusive conversation. Context matters on Bloomberg.
It's your Bloomberg Brief. Lucid shares are off to a hot start this month. They're up nearly 20% since July 1st. The shares are rallying after the EV startup announced second quarter deliveries and production targets above expectations. Joining us now, I'm pleased to say, live from the Bank of America Breakthrough Technology Dialogue is Lucid CEO and CTO Peter Rawlinson with Bloomberg's Tom McKenzie. Tom.
Danny, thank you. It's very timely, actually, because the Festival of Speed is happening as we speak as well. So a lot of auto heads, a lot of petrol heads here, but we're not talking about petrol, we're talking about EVs. And as you say, the CEO of Lucid joining me now, which is a fantastic conversation. We hope. Danny, I'm going to bring you that now. Peter Rawlinson, the CEO, of course, of Lucid. Let's start then with the production delivery numbers. As Danny was saying, stronger than the markets expected. The shares have had a lift on the back of this. And we can bear that as well. We bring in the Tesla story because they've come in with slightly better numbers as well in recent days. Is this a sign that the EV market is starting to turn around, Peter?
It certainly is for us. We're up 70% quarter on quarter with a record delivery in Q2 on the back of another record delivery in Q1. Things are looking up. And I think more people are getting the message that we have an extraordinary product in Lucid Air. And everyone's also looking forward to our new SUV, the Gravity, which is coming later this year.
Well, give us an update on the Gravity, because I know analysts are looking at that as well. And they know that they see that as consequential, really consequential for your story longer term. So the Gravity SUV, is production on track? What is the time frame? What is demand looking like?
It is scheduled for start of production late this year. We're seeing an incredible latent demand because this is an unprecedented product. It has a range of attributes which really have no right to coexist. It has the driving dynamics superior to a Lamborghini Urus. It has the presence and stance of a Range Rover. It has more interior space than an Escalade, and yet it is only slightly smaller on the outside than our Lucid Air. It's a 7-seat, 3-row SUV. This is what the market has been waiting for.
OK, that's a very good sales pitch there, Peter. Talk to us about the margin story, the profitability then. At what point can you start to raise prices for your vehicles and start to push margins out of negative territory?
Well, we've been able to bring successively more attainable products to market, where our range now starts at just $69,900. And we're able to do that because we've got the most advanced technology in the world. Let me explain. We're able to go further with less battery energy than anyone else. I recently announced that we hit the magic 5 miles per kilowatt hour landmark, and we're going to reveal a product which achieves that very soon. We're actually at 4.74 miles per kilowatt hour here today with our pure electric vehicle. Now, that pure variant has a range of 419 miles, more range than anyone else in the marketplace, but it does it with just an 88 kilowatt hour battery pack, and that makes it the most sustainable vehicle on the market today. Any journey you take, that car uses less electricity to go from A to B than anything else in the world today that's on the mass market.
Okay.
And that means we can have less minerals, less dependence upon mines around the world, less dependence upon sources of lithium, nickel, cobalt. And this is what the world needs: more efficient, more energy efficient, and more high-tech EVs. And Lucid is leading the way in this respect.
OK, 5 miles per kilowatt hour, as you say, a magic number, as a landmark number, as you've described it. You are, of course, backed by Saudi Arabia, the Public Investment Fund of Saudi Arabia, to the tune of about $6.4 billion US. Is it fair to assume that you're going to need to raise a similar amount, around the $6 billion level, to push forward into the future? Is that about an appropriate number to be thinking about in terms of future funding?
We haven't guided on the actual quantum, but let me tell you, this is a capital-intensive business, and we do need to raise more money, and we will at opportune moments in time on the future. Our vision is to be a major player here. Our SUV this year, and we've got the mid-sized platform coming late 26, and that's going to be a high-volume vehicle, mass-produced both in the US and in Saudi Arabia.
And you've talked about being in this for the long run with the PIF, with Saudi Arabia.
Yes.
Is there a line that they draw somewhere, Peter, where they say, OK, this is enough?
Look, they're the perfect long-term partners. We share a long-term vision, and we're mutually incentivized for success. They want this as much as I do. Watch this space. They're in for the long term. And this transcends a mere financial investment. We are a cornerstone of them realizing their bold Vision 2030, where they transition their quintessential fossil fuel economy to an environmentally sustainable economy.
OK. When you say watch this space, something's going off in my mind suggesting that maybe they're going to come through with another check soon from the Saudis for the business. Talk to me about the deal you did with Aston Martin Martin, because it's interesting. So you've licensed some of your technology to Aston Martin. Talk to us about the consequences. They have delayed their EV. Does that have an impact on that deal? Does it have an impact on Lucid?
Very mildly. But the deal is very strong. It secures them high-tech electric technology for the next decade. We're supplying them with modules for the battery pack, our Wonderbox charging, two-way charging technology, and our Sapphire drive units. These are the world's finest drive units. And it's appropriate that Aston Martin gets the really top-end stuff from our range, the hypercar, high performance. If you look at the future, though, it gets a lot more exciting.
Were you disappointed that they delayed their EV?
Well, absolutely. Any delay in any EV is less than ideal. But it's going to come, and we have secured their electric hypercar future for the next decade.
Is that a template for other licensing
Absolutely,
deals?
I hope it is. And it's actually initiated a lot more interest. We are in discussions with others. And when it gets really exciting is you look at the technology that we're developing now for a mid-sized platform for late 26. That really suits mass market family car applications. That's why we're in this. Yeah. We're not here to be a niche player. Lucid's here to bring down the cost of electric vehicles for the benefit of all and be a major player.
And Rivian doing an interesting deal with Volkswagen. Indeed. Investment from VW into Rivian in exchange for some technology. Yes. Is that something you would consider, that kind of partnership, that kind of deal?
I'm always interested in partnerships which involve our technology.
Okay. We talked about the Gravity, the SUV, coming online. You talked about production at the end of this year, deliveries next year then. What about manufacturing in Saudi Arabia? That's part of a process outside of Jeddah. You're putting the car together there, but in terms of full-term manufacturing in Saudi Arabia, when does that come online, and what is the challenge in Saudi Arabia? Is there a challenge around talent?
There's always a challenge around talent because as a company, we're only as good as the brainpower that we can attract. No company in its own right has experience. It's only the brilliance of the employees that represent the capability of a company. But we already have the very first car plant operating in Saudi Arabia. Right this moment it is running, and that is a kit assembly plant on a very modest scale. We are actually laying the foundations for our major plant, which will be scaled for 150,000 unit capacity per annum as we speak, and that is scheduled to be ready for production late 26, where we'll put our mid-size vehicle into that plant.
Okay, Peter Rawlinson, thank you very much indeed. CTO and CEO of Lucid, on not wanting to be a niche brand within EVs and hitting that 5 mile per kilowatt in terms of the range for their vehicles. Looking ahead, of course, to the SUV as well, the Gravity. Danny, Manus, back to you.
Tom, thank you very much. Sitting in a cornfield there. No better backdrop for an EV conversation. And have the Saudis got their checkbook out? That's the question. Tom, great conversation. Danny and I will take you through what you need to know for the rest of your trading day in just a moment. This is Bloomberg from a radiant City of London.
Let's get you set up for your trading day on this Thursday. We're going to get earnings from PepsiCo and Delta before the bell. Then the big data point, U.S. CPI, comes out at 8:30 a.m. Eastern, 5:30 p.m. Biden will be holding a news conference, which his team is taking the language from our Justin Sink, calling it the big boy press conference, Manus.
It is, and this is the whole point, isn't it? I think you said this, we were just chatting on IB. This is live. This is the non-contained TV interview. Can he deliver when you're losing George Clooney, when Nancy Pelosi's, not exactly fully behind you, and Senate people are coming out against you?
Yeah, he's got a big schedule coming up, Manus, so he has his presser today. On Monday, he'll have a sit-down one-to-one with Lester Holt. Again, it's getting him out there trying to prove he should still be in the seat of power.